What's going on, people? Thank you, everyone. I see your comments. Yeah, Sundays. This was supposed to be done every Sunday for a while. To be honest, but just time and stuff in it. But today I felt like getting in because we had a pretty strong week. Um, so I'm gonna. It's just standard back testing, so we're gonna split our days up. See what we can find. Hopefully, everyone else had a good week as well. But can you confirm that you can hear me? Okay, you should be able to. Bear with me. Great, thank you. Right, in terms of, why did we have a good week? We had a good week because in terms of delivery, it was very classic in terms of us, creating the high on a Wednesday and then expansion on the Friday, and then the way we used the Sunday opening price to our advantage as well. And then also the anticipation of getting that reversal midweek was pretty nice. But I haven't back tested in a while. We are going to drop down to like the 5 minute, I think. Generally speaking, I tend to trade on the 5 minute. 1 minute when I'm in the charts, I'll usually enter on the 5 minute if I'm busy or whatnot. And yeah, so that's Sunday opening. And then we'll go down to the 5 minute. And I do the same thing if you've watched my backtesting videos before, you'll know exactly what I do in terms of marking out the Asian range, casting forward, etc. And then being able to, use that to my advantage when trading. But I'll get the London session marked out. And my setups tend to form in London around 3 a.m. So we'll definitely be looking at the 3 a.m. setups that you can see happening here, rebalancing, etc. 1 second. Just had a weird message come through. Okay. Cool, so we've got the London session, we've got the Asian range, and then, like I said, my setups tend to form in the London session around 3 a.m., which is right here. In fact, maybe we should drop down to the 1 minute. I need a different mouse. My mouse is peeing me off right now. And you can see a classic formation here in terms of us creating a high, creating a low, expansion. But like I said, 3 a.m., there's usually a fair value gap that will form somewhere, or rebalancing, which is what we have here. So I'm going to start the analysis from here, and then I'm just going to mark out everything we see. And this is what you guys need to do as well in terms of just understanding market structure, and time and then price. I can't stress that enough. But once you know the certain times where certain things will occur, you'll see how repetitive it is. Like, for example, I've marked out 4 a.m. as well, because at 4 a.m. usually in the London session there's either a reversal or a continuation that tends to happen. It's kind of like the 9:30 in the New York session as well. But like I said, my setup tends to form around here. So let's take a closer look. And you can see we drop down below that Sunday opening price into the Asian range. Let me see where. Yeah, into the Asian range. And you can see that the Asian range has a breaker that's formed low, high, low, low. So if we can look at the last up close candle of that, you'll see how price taps into that. to create the low of London. Real the midpoint, and I'll make it purple just because it's the Asian range. And then here, the times like this when you have a suggested reversal, why I'd expect a reversal around here or some kind of significant price action because we've traded into this breaker from the Asian range. But this is when you want to start thinking about things like divergence. And sometimes you'll find that, why is this an example? Yeah, sometimes you'll find that, you know, one pair is making a lower low. So for example, in this example, you can see how euros decided to make the lower low right here, whereas pounds made a higher low to suggest strength. But my point is, when you're anticipating some kind of turn, that's when you need to start actively looking for you know, divergence against the other pair. In this case, the other pair would be euro. So here's where the change in state of delivery happened. As soon as we traded back through here, we had this would be considered a mitigation block because we didn't make a lower low. So we can look at that last up close candle, and I will mark out all of these. And what I might do is screenshot these as well and share it with you in the Discord server. But just for your own study. But this is the level of deep analysis. Like, remember, when I'm doing these like daily reviews and weekly reviews, I don't go to this level of detail because I'll be here for ages. That's why my backtesting videos are 1 hour long, because I'm going into the amount of detail I'm going into is just not worth doing in a daily review or weekly review. Whereas this is what you're supposed to be backtesting. So this is what you should be spending your time doing. And then when it comes to the charts, when I am calling out these levels, it's not completely random. It's based off my understanding as to what I'm seeing. And the more you expose yourself to it, the more you can just see it, you know. Not to say that I'm some kind of god or anything with the trading, but in terms of the concepts which I follow, this is how we should be practicing it. Yeah. And then we have a fair value gap right here, classic, and this will be the earliest point of entry that we could have got, right here for the Monday London session. But like I said, I don't usually look for my setup until 3 a.m. anyway. But you can see this forms around 2:30. So, you know, it's hit or miss. What I tend to do, I wake up at around 2 anyway, so I'll be in the charts, and you know, it's typical to have a big movement off the back of London one way, just so that you can send it the other way for the rest of the day. Like, this isn't unusual, but mostly it's because of the Asian range. And I'll have a video on the Asian range. It's in the membership on YouTube, but I do have a video on the Asian range explaining why it's so important, and I will pretty much go through that. I suggest watching it. Well, obviously I suggest watching it, but I'll show you now. I'm looking at about the 50% level, which is right here. Like I said, right now we're trading into a breaker. Typically, price will take out one side of the Asian range and then the other. So at this point, we took out the high of the Asian range. So as price is dropping, it'll be easy to think that we're likely going to take out the low. But because of the breaker we have, and because of the amount of consolidation we have here, and because of the bullish, you know, there was a bias. Remember, if you watched last week's videos, you'll know that I wanted to see the high get created first, because I was expecting a down close week. Then, you know, we expect to see upwards movement, but that's just something to take into account. So we have a fair value gap right here. This will be our earliest point of entry. Honestly, I wouldn't be able to trade this, just because I would have anticipated price to turn at this block here. The 3 a.m. setup though is more my style, because like I said, it's at 3 a.m. when I expect to set up, and I can see the amount of movement away, and then I would have already analyzed this, and I would recognize that we're above this on the opening price, and you can see how price treats that. And this will be second stage. Now, there's a lot of rebalancing going on here, and ICT spoke about this a lot recently, but when price trades back down into previous wicks to keep going higher, he talks about it in all-time highs. You need to constantly look at the previous wicks and just look at how price is treating them and how it uses it to keep pushing itself higher and higher. Now, I don't know how to study it specifically, you know, but it's called immediate rebalance, and it's constantly happening. So here, that's an immediate rebalance, we get an expansion, and then here, immediate rebalance. Oh no, that's not immediate, but it's a rebalance nonetheless. Tap into fair value gaps, and then also there's gaps that get left open. So I actively look for these. So this gap got left open, we didn't trade into it, and that would be indicative of higher pricing because it's failing to fill this discount PDRA, and I think ICT calls it a breakaway gap. So I'd see this as a breakaway gap because we haven't yet created one, and this would be it because we're failing to trade into it. I'm gonna make this light green, why not? Can barely see that, guys. And then here, let me show you something. So when I see wicks like this, wicks are fair value gaps too. So when I see wicks like this, I just look at it as a fair value gap. When you got like a wick and then a clean candle through it, draw the wick out, and then it acts as a fair value gap, and you can see our price is respecting it, and we're tapping into it. And these, like I said, because it's after 3 a.m. or it's at 3 a.m., this would be my entry. We do have a gap here as well. So if it wasn't the wick that we're trading, it'll be here to go long on the back of. And then in terms of stop loss would have been put below below the bullish order block, which is this. So this is the bullish order block that calls a move, fair value gap, go long, stop loss below here. Now where would we target? Obviously we need to take profit somewhere. This would be based off previous data. Yeah, I'll have to jump up to the high time frame in a bit, but now that we're on the 1 minute, I like it here, so nonetheless. Let's see. So here, it does get quite messy in terms of creating a high, pulling back deep as well, heavily back into the range, continued consolidation, runs out another high, pulling back deep again. But you can see that price is kind of trapping itself within this range here. It's a clear point of accumulation. And then if what will likely happen is if we drag that through the week, I wouldn't be surprised if price use that same point as a reference. Let's just take a look out of curiosity. Okay, barely. We traded through it, but nonetheless, you can see the way our price tapped into on that Thursday even. But again, anticipating these things is only so far. Hindsight is 2020, isn't it? So we are going to go to 7 a.m. Where were you? What do you mean? I don't know what you mean. It's Sunday today, guys. I don't post on Fridays, for the record. Till 10 a.m. And then the range, I'm giving out gems here. The range between 5 a.m. and 7 a.m. is a range similar to like the Asian range does. As in, you can easily find that price will use it like the 50% level and refer to it similarly. Or you'll get runs like this where it just runs straight into New York. Now, when price is running like this into New York session, you know New York's going to be a mess, which is what we have here, and it just breaks down after 9:30 or 9 even. So, you know, this I don't want to be trading, but there's obviously a lot of movement from London, and like I said, when you see it get carried on between 5 and 7, because usually between 5 and 7 there's consolidation. So when you see it moving through there, you can anticipate that London's probably not going to be the greatest, and that's usually a signal just to depart. But nonetheless, you can see 9 a.m. again, setups form. 8:30, 8:30 is when the high impact news releases, right? So let's take a closer look. So between 8 and 8:30, there's usually a setup, and then at 9 o'clock as well. And then between 8:30 and 9, there's usually some kind of what do you call it, retracement. It's all good and well me saying this, and we've only back tested this far so far. But when we go into the next days of the week, you're gonna see what I'm saying in terms of the familiar behaviors of price. But you can see we've got a beautiful breakdown in price at 9 a.m. But like I said, I wouldn't be trading this anyway. I would have already tapped out because I don't want to be involved in this. This isn't nice. But in terms of, again, we're talking about price structure. You know, this is a perfect example. Yes, I will be recording my Sunday weekly review. So, yeah, in terms of structure, this is beautiful. High, low, higher, high. Change in state of delivery, return to breaker, continuation, rebalance at the bearish order block, and you can see our price just chops its way down quite nicely into the London close. So we can break this down because it's pretty clean. So this is our market structure shift. Breaking structure. And remember, what makes it a breaking structure, because you could argue, why isn't, I'll show you in this 1 second. You could argue, why isn't this a breaking market structure? Because of the time. So 9 a.m. we know that there's going to be, some kind of significant macro, so to speak, happening. 9 a.m., 8 a.m., 2 a.m., 3 a.m., like pretty much every hour. I don't know how it works on ICT's level, but my point is there's certain times of the day where we anticipate these things to happen. So when we see it, we can trust it, which is why when this broke down at 8:43, for example, it wasn't as impactful as this breaking down at 9:03. Because of the news and the time that the market's open and such, and there's lots of other factors. So again, time then price, I can't stress it enough, and ICT always stresses it as well. So this will be the earliest entry if we were going to short. To be honest, a day like this, when you can go long in the morning and short in the afternoon, it's very rare I manage to do that. It takes a lot of skill to be able to trade both sides. It's doable, but you really have to be in it. And then this is the breaker as well, so I'll just drag that over like so, make that lighter orange. And then we'll put our arrow there. But again, it's all time and then price. And then we have a bearish order block right here. That price trades into here. But we've also got that coupled with a fair value gap as well. And then what's interesting is if we split this, you can see our price. You see how the volume respects the 25% level. That's nice to see. If we traded deeper inside of it, the movement that we get off the back of it wouldn't have been so aggressive, so to speak. But because we only managed to hit that 25% level on a volume basis, it suggests weakness. But that would have been another nice entry as soon as price traded into this gap. That would have been fine. And then you can see how we're starting to chop down through the sell side liquidity pools. And then more fair value gaps keep forming and we keep rebalancing at them, but we keep staying below the 50% level. Yes, we're wicking above. Wicks do the damage, but it's consistently happening. See, even here, yes, we come into the fair value gap, but volume staying below that 50% level, volume staying below that 50% level, volume staying below that 50% level. And the reason this is important is this is why in all my videos I'm constantly talking about splitting fair value gaps up, because I want to see how it's treating it. As in, yeah, like I said, it's overshot it with the wicks, but generally speaking, it's failing to create significant volume above it. And this is like the signature in price that we're looking for. But right now I'm just marking lots of fair value gaps. Here's another gap. Remember on the way up I was talking about gaps that get left open. This is a perfect example of that. Because we're already a way down, that might be a measuring gap. Maybe not. I'm not sure what to call it. There's measuring gaps and there's breakaway gaps, but these are gaps which don't get traded to, and like I said, I'm constantly looking out for them, because if they get left open, it tells me that I'm in a comfortable position. Like, let's say if I was in a sell from here and we did get down to here, I could see this and be like, okay, it's likely we're going to continue, because you know we're continuously failing. Price is constantly taking out lows. Again, easier said than done. You know, I'm not making this out like it's easy, because you know otherwise we'd all be millionaires, wouldn't we? But it's just important to see how look at how easily price is slicing through. You know, we're getting high resistance on the way up, and it's just slicing through on the way down until it gets to 10 o'clock, which is the start of the London close, where we either get a retracement or a run on price. 10 to 12, and you can see this, we get a retracement. 10 to 12, just like what I was saying. And that's what I'm saying. When you know the times of the day where certain behaviors are likely to occur, it's easier to anticipate. So when we're here and I realize, okay, it's 10 a.m., we're likely going to see a retracement, or we're going to get a continuation. Price is holding itself, and then we do rally. Now I don't trade after 10 anyway. I only trade London and or New York. And it's interesting to see where we're retracing as well, what we're traded into, this consolidation from London, where we do have a kind of breaker behavior going on in terms of low, high, low, low, rally, took out this high. So if we drag that up close, which would technically be a breaker, you can see that's where price is just tapped into here and it's holding price. But it's not as clean as I'd want it to be. And I didn't even trade this Monday anyway, just because I don't tend to trade Mondays, but this is the thought processes I'm usually going through when I am trading. So we're moving to the next day. Let's see, is the next day juicy enough for us? Again, so much consolidation. This is disgusting. I don't really want to even look at this. I wanted to find what's going on here. I didn't see this. That's why the 5 minute can be cleaner. Not today, trading view. Let's talk about Wednesday, which was when the interest rate announcements happened and where we got our shift. I want to talk about this price action here. It's what happens when we have news like this. The actual price action is very classic. When you see price retrace like this, first of all, it drives people mad because they don't know whether to go long or short. But it's a clear change in state of delivery. We just returned to a breaker, which is the last down close candle before the up move. And then price trades lower for the rest of the week. And then if you remember, again, if you watch last week's videos, you'll know I called pretty much, you know, the retracement in the morning to then trade lower for the rest of the day. So let's get that all laid out just so we can study it a bit better. But what we're looking at is we're looking at this. And we're looking at how we created the high. And then, you know, traded lower for the rest later. Now I wanted to see the thing that caught me out was because I wanted to see the high get created in London. So ideally between 2 and 5 we saw the high get created, but we created it in we created it just as New York started, and then we got the continuation and price ran down to that Sunday opening price. Sunday opening is really important. I talk about it every week. You need to know where it is, because like I said, when you create highs like this in the week, a clear high, and we still haven't, remember, right from Monday, we haven't touched this Sunday opening price. We've been way above it. We tapped below it in the very, very start of the week. But if we get to Wednesday and we still haven't touched that Sunday opening price, that's the only place it's going to want to go to. So once you recognize that, you know, you can start thinking about shorts, right? But then the next factor that comes in will be time, and when's it going to run for it, and it will be off the back of news. I think this was when we had the GBP interest rate. That was it, exactly. So they held price, and they wait for the time to then run it there, because they could have dropped it on the Wednesday, they could have dropped it on the morning, but they didn't. They waited till 7, which is why they, this is what caught me out, because I didn't think, okay, they're probably gonna wait till 7 before they run it. But it's time then price. It's time then price. And remember, we have the economic calendar every week, so there's no reason we can't anticipate when certain swings and such should be occurring. But nonetheless, let's take a look, and I'll be using the Asian range nonetheless. 2 till 5. 7 till 10. And then there was someone in my Discord server that went, was it long? I think it was long after we created this low. And I asked them why they went long. And I didn't understand, because it's 10 a.m. We've done all of this movement. Any kind of pullback now, first of all, it's not going to be running out highs after 10. It's not going to be running out highs on a Thursday after 10, after having a movement like that. And the most it will do is retrace, and it's only going to retrace so far. So going long in a clearly, bearish environment was not sensible to me. But again, people have different trading styles and stuff. Like, I can imagine a lot of you don't even watch ICT, but the concepts I'm teaching you are from his teaching. So I'm just going to get the Asian range marked out. And this is a classic example of when both sides of the Asian range get taken not every day, but most days you'll find that both sides of the Asian range needs to get taken out. And if it doesn't, it'll come for it later on in the week. And this is an example when both sides get taken out in the same session. And this is this is my easiest setup when you have Asian range. When London creates a low, and remember, what time did I say that I trade London? 3 a.m. So let's go to 3 a.m. and my setup should be there. So we go to 3 a.m. And what I'll do now is I'll drop down to the low time frame just so that we can see, because sure, I could go long on the 5 minute, but that's not ideal. But 3 a.m. happens, we have a beautiful expansion, we run out these buy stops back into the Asian range, and we find support. This would be my long. Find support on the low of the Asian range, tap to that fair value gap, and then I'll hold until we get to the high of the Asian range. So that move would be me done, usually, because I anticipate the other side of the Asian range getting taken out. I don't want to talk too much on it, because like I said, I've got a video in the membership specifically about the Asian range. It's on the channel, guys. But that's the concept, nonetheless. But that would be a very typical, trade for me. Oh. Now, how smooth this is, we were lucky here in terms of how smooth it is. Price isn't always going to move this smooth, and we know that. Sometimes it's quite high resistance. Sometimes it'll take the whole day to get to the other side of the Asian range, but you'll find that it'll try and do it. Sorry about this. Let's make that red. And then in terms of market structure, this is very classic, and this is where a divergence comes in. So let's get Euro and take a look. So there's not really much divergence going on in this example, so that's not really useful to us. But sometimes, like I said, you'll find a higher high or a higher low somewhere. We do have divergence on a higher time frame, and we will go over to that in a sec. But in terms of market structure, this is beautiful. Low, high, low, low. Change in state of delivery. Breakaway gap. Slight consolidation, cool. Run out this high. Now, when this high gets taken out, that's when I'm like, okay, we're in for, this is good. This is nice to see. This is change. Well, no, that's buy side liquidity. Obviously, if we can, get in on, if we recognize it this early, that's ideal, but you have to be on the 1 minute, and trading on the 1 minute, as you know, is easier done in hindsight, because it's not easy to do. even the way you see this, technically this is a break. We've got a low, high, low, low expansion. You see how we fail to even tap into that? That's showing bullishness, which is where this as a breakaway gap comes into play. We tapped into it slightly, sure, but my point is we failed to tap into that. So there's no rebalance there. There's a gap, guys. There's a gap between here and here now. And that's the breakaway. In fact, let's just highlight that because that's what's important. There's a piece of price action there that price fails to trade into. Now, on the downside, again, does price refer to it? Let's see. I'm curious. This is the beauty of backtesting as well, guys. You get to uncover some things about, what's it called? Algorithmic price delivery. I guess it's a point of interest. It's a point of consolidation anyway. You know, we use it as a parameter, high, low, high, high, and then leave it. But nothing to stress over. And again, all these little things, I don't highlight these in my daily reviews because we don't need to. Like, it's just understanding that they're there that helps with bias. How I do my daily journal. My YouTube channel is my daily journal. I actually started it because I wanted to, like, I say that. I've started watching back on my previous day's video, and then I'll just see. In terms of my trading itself, though, I have this thing called FX or Forex Journal. FX Journal. It's on the App Store. I don't know if it's on Apple. It's on the Play Store. And I usually log my trades in there, and it gives me all the stats. It gives me my strike rate. It'll give me my risk tolerance. And it draws it out in a graph so I can see the growth. So I journal in there. I have a Forex journal on my phone. And then, like I said, this channel is for me to journal. It's for me to constantly, it forces me to be exposed to the charts. And I can't stress enough how important that is. Yeah, like I said, classic Asian range trade. And then let's just mark out this. We have some inversion fair value gaps going on here. Mainly here. But this would drive me insane. But this what I mean. This is why all of this is why I wait until 3 a.m. No, I don't do physical, you know. The only physical thing I do, I have charts printed out. I have charts printed out. So sometimes a while ago I printed out a ton of charts. Like I'll print out a day, like I'll print out yeah. I'll print like this out on like a 5 minute, and then I'll analyze it with my pen with a pen and highlighters and stuff. Honestly, physically analyzing charts is a way different experience. I can't suggest it enough. It just makes it so much more interactive, and like it makes it feel more algorithmic. When if you're under the belief that it is algorithmic price delivery, then when you print it out, it feels more like that because you're more in touch, literally. This is the consolidation I was talking about. Remember, I said between 5 a.m. and 7 a.m. there's either a consolidation or it's going to run and then consolidate in New York. This is a perfect example of a consolidation between 5 and 7, and then it runs in New York, as opposed to a run and then consolidates in New York. So it's either one or the other. And when you recognize this, it helps us. So if I'm seeing, okay, we're not moving, cool, then I'm aware that moving into New York, we are going to get the moves we need. Now, this was an interesting New York session because we moved right off the back of, oh no, it was the high impact news, my bad. That's what did it. But what you'll find is that New York works similar to London in that first hour we'll get like a high, or price will trade the opposite direction to what it's usually going to expand in, just like what we have here, how we traded lower and then expanded. Usually New York will do the same. It will trade higher, which we technically did, but we had high impact news, and then it'll trade lower for the rest of the session. So just food for thought, guys. To be honest, I want to go into, what time is it? How long have we been going? It's 10 o'clock already. Okay. Right, I'm going to go into the 5 minute. I did want to, yeah. Let's go into the 5 minute. Just highlight a few things. Definitely print charts though. If you can, do it. And it's something to be proud of as well. You can look back at it, it's like art. In fact, I need to dig mine out. Fair value gap. Rejection block. Rejection blocks are the most difficult PD arrays I've come into account with, but we saw it in action on the weekly this week. But the idea is that price will wick above a certain level and it'll get rejected instantly, and it acts like a bearish order block basically. So this would be considered a bearish order block, this wick. And you can see what happens here. We trade into it, we leave it, tap into it again, we leave it. I have only cable and fiber, to be honest. I looked at JPY recently. There's a lot of pairs I haven't looked at in a while. I should. I just don't. I got so used to this. There was a point, was it last year, I was trading JPY. It's all the same concepts. Obviously, some moves happen at different times. That's another thing. I trade GBP and Euro because it's more in line with my life, because obviously I'm in London, so trading London sessions easier, trading the New York sessions easier. Whereas if I'm trading JPY, this Asian range which I use would be where I'd probably be trading more, and it'll just be a little bit complicated. But let me show you the rejection block I was talking about. Is there a way to highlight everything? No. So here is an example of a rejection block. What a beautiful week. So I'm looking at this wick here. Now, when you have a wick behind it, yes, this is the longer wick. But what I do, like, it's hard to explain, but when I think in my brain, I just imagine this is in front. It's like, although the rejection happened behind, because you got to remember, we created this high, we came down, we opened, we ran it, and then we still came back through it. So this here is what I'm looking at, really. Although we overshot it, I'm still looking at it as a rejection block, because look at the price action that came following it. If that makes sense. Yes, we overshot it, cool. But I'm still looking at it as a rejection block. So when price was trading up there, that's why I was expecting it to act as so, especially because I wasn't expecting us to run this high anyway. If we were going to run this high, price would be running up to here. And this is what, look, a fair value gap that's been left open. And what have I been saying all today? What I've been saying, breakaway gap, breakaway gap, breakaway gap. This is what I'm looking for. And this is on a weekly level, guys, which is how you get in on, stupid moves that last like the whole year. But yeah, it's just interesting to see. But yeah, I'll have a weekly review out today anyway, guys. Make sure you have post notifications turned on. To be honest, I'm just expecting us to keep running. I hope, hoping this is the reversal which I've been waiting for. But what I'll show you as well is which is quite interesting right now, is the divergence that we have going on, which is beautiful. Which is why as well, if you watched last week's videos, you'll remember me saying if we're going to be trading, if we're going to be going short, trade the pound, because pound's weaker right now, and we can see that here. Pound's creating lower lows. Euro's creating higher highs. No, sorry. Pound's creating lower highs. Euro's creating higher highs. And dollar is creating lower lows. Now, when we have... This can mean two things, but if you get it accurate, I'll show you what I mean. So we can see that these two are in unison. When we have one pair, it's like the market's winking at us. Especially look at how weak pound is right now. When you have one pair doing this, it's like the market winking, saying, look, we're trying to go this way. It's just that they're, what's the word? There's a word there. Offsetting their positions, or their, I can't remember. ICT spoke about it. But this is a classic example of divergence. That's hinting to us that one side of the market's, ahead of the game almost. And then what will happen is you'll see the rest catch up. But I can't for the life of me remember what it's called. But seeing that on a weekly level is significant. And you can see us tapping into that fair value gap there. So it's going to be interesting to see what we have happening for the rest of the year, to be honest. December's when it gets messy. I don't tend to trade December's, but you'll know about that. In fact, tomorrow might be my last video for a week because I'm heading on holiday. But I'll let you know. Let's go to the 5 minute on Euro. Take a closer look. There are some beautiful moves I got in this week. I can't remember where. I remember calling Euro's high around here though. That was nice to see. Again, very classic. When you see these things, you shouldn't be scared. A lot of people rush into it, so they'll have the high impact news. This was FOMC. They'll rush into it and try and go short on the back of it really quickly. But what you'll see is how they consolidate, and then wait right until the next day before they actually move it. And that's what you call time dilation. And this as well, this false move down to engineer liquidity. This is engineered. They put that there at 2 a.m. just to pull it back up to run anyone that is in a short out, and then just sunk it again. And that's why you have to wait and just be patient with it. Again, easier said than done. But in terms of delivery, if you were to trade it and hold your position strongly, you just look for the last down close candle. Maybe you go short on the back of that. Stop loss above the fair value gap, the candle with the fair value gap. Again, where are we staying below the fair value gap? 50% level respected. What's this? We have another gap. What's this? Breakaway gap. So we're seeing all these things happen. That means we're confident that price is likely going to continue lower. It's failing to get up to here. It's respecting the 50% level. We've traded into a breaker. It's just been FOMC. It's the Thursday of the week. We've just run out buy stops. You see how all of these things... Oh yeah, time dilation. Let's talk about it. I don't know much about it. It's just you recognize it. You'll feel it. But I'll see what I can say. And then... and then... Yeah, all these come into account. So if you went short here and put your stop loss above there, but was willing to hold through this, then, you're laughing, aren't you, really? Especially if you're willing to hold to the end. But that's where, things like partials come into play. Like, you might take off some of your stops here, maybe re-enter. Time dilation, an example of time dilation is this. It's hard to explain without there's a really good example where you can, there's a good way of doing it where you can, basically, I could get rid of all of it. If I got rid of this, if you ignored this, let's see if there's a way of us doing this. I don't want to see the chart though. Like if you looked at a price like this and just imagine, look, you see the continuation that we have here. If we just shift, it's so hard to explain. If you just shift the whole market over, the delivery and everything will still algorithmically be the same. Does that make sense? As in, we still return back into this range up to the breaker. The down clock is like, wow, I'm looking at this mainly. But they do this, they dilate, like they'll do this when they're waiting. And this is why time is so important, because it's very typical after high impact news like FOMC, like non-farm payroll. They'll especially FOMC, because they're doing it at 2 p.m. They'll just throw it into consolidation, and they'll consolidate right through. But what I'm saying is that, like I said, if you just look at it and pretend it's not there, and in your mind just shift the whole market over, the same setups are forming. As in, it's a classic setup of a high, low, high, breaker market structure, return to breaker and trade lower. So this return was just a matter of time. If this return happened over here, it would be much easier to trade. It's just that because it happened at 2 p.m. and it was getting into the evening and such, they decided to dilate it, so they put it into a consolidation, and it helps them engineer liquidity. And what do I mean by that? They got buy side liquidity residing above here now. After how many hours? Let's take a look. We started at 4 until say midnight, right? That's 4, 6, 7. That's 8 hours. Where they've got buy stops residing above here, and they've got sell stops residing below there. Pretty much what the Asian range does, and the Asian range starts at 7 p.m. So let's get that marked out, and you'll find that the high and low was created within that Asian range off this time dilation, if that makes sense. So the Asian range is there until midnight. Again, I highly suggest watching the Asian range video. This is getting complex. Both sides of the Asian ranges will get taken. Perfect example again. Take out the low, ran for the high. Again, this movement. This is the most beautiful, easiest trade. Look at this setup here as well. Classic. I love to see it. Fair value gap. Go long. Changing the state of delivery here. You know, breaker. So you don't even need to enter on a fair value gap. You could have entered on this breaker as soon as we tapped into it here, and this is what you call immediate rebalance. It's one of the most sensitive things. As soon as this here, ICT spoke about it. It's called immediate rebalance. I've traded it once. I think I have a video on my channel of me doing the immediate rebalance. It's crazy. And what happens is you just go, as soon as it taps into the previous candle's wick, you go long, and it just shoots, and you can see that's exactly what happens. And it'll run for what? The high of the Asian range, but also the high of the time dilation, because they've done that to build in the liquidity that they then just snatched. I want to try and find that immediate rebalance video. Let me see what I can do. Let me see. I wonder if I can find it. It was a very long time ago. I need to start doing more trade executions again. It was due to macro. Yeah, I'm not going to be able to find it. If I find it, I'll put it in the Discord server, guys. I do want to find it because it was beautiful. It was a beautiful trade. But anyway, that's what you call immediate rebalance. And it's this down here. And when you recognize it and know how to do it, it's very powerful. And then here's 50% level as well. Off this wick, we split it. And look at the quarter level. That's what we tap into here. Let me get back the chat. But yeah, interesting week. I'm gonna bring this video to an end. Time. What do you mean time? Like I said, it's time than price, guys. Like the times that you need to know are midnight, 2 a.m. to 5 a.m., 7 a.m. to 10 a.m. And then the time for setups, the setups which I trade are 3 a.m. I'll look for my setup, which is what we have right here. I wait for 3 a.m. Now, it's not going to happen bang on 3 a.m. It's like 3 to 3:20 at the most. So I'll be in the charts for like 15 minutes, New York. Make sure your charts are set to New York. But this is 2:55. Okay, let's not use that one. Okay, let's go to the 1 minute. I bet I don't have an example now. Where were we? So here's 1 minute. 3 a.m. is not a good example here. Well, this is an example of it being bang on 3 a.m. as in the last candle we had was what set it off. But I'm saying anyway, 3 a.m. is my setups are forming around 3 to 3:15, and then also 8 a.m., 8 to 8:15. And then also, if you understand and then after that, once you understand the other times like 4:30, when there's, like I said, between 5 and 7 as well, is it going to be a consolidation, or is it going to be a rally, and how is price going to treat it? And then the time frame between 5 and 7 as well. Right now I'm just throwing numbers around and it sounds complicated, I understand, but there's no right or wrong way is what I'm saying, and that's the beauty, but also the curse in it. It's the blessing and the curse. But look at how it uses that 3 a.m. to 7 a.m. If we mark out that 7 a.m. candle right here, actually I'll drag it through, but once we start the New York session, if we split this into quarters, the low and high off that 5 a.m. you can see how it's all utilized here. Let me just turn this down. So the each session will, the New York session will use that range that's been created, whether it's a 25% level, whether it's a 50% level, or whether it's trying to take out both sides of the market. It's going to utilize the range. Again, it's not a set formula every single day, otherwise it would be easy. If it was easy, everyone would be doing it, but it's just understanding the behaviors of the market, and you can only do that by backtesting like this, by being in the charts, and taking your time. But like I said, my setups usually form around 3 a.m. and around 8 a.m. as well. But again, it's not every single day. I need to be confident. That's why I don't trade Mondays. And it'll only be if I'm feeling confident that the market's going to go a certain direction. But it's times like that. For example, the Thursday last week. Let's go on to the 4 hour. We'll go to GBP. The Thursday we had last week. Mark out the week. We'll go to the 1 hour actually. When's Monday? Monday the 15th, midnight. Tuesday. Everything is derived from the high time frame, right? And I said this earlier, but I'll say it again, like, although we were down on the 1 minute, 5 minute, looking at each intricate fair value gap and everything, it was being able to trade it is derived from the fact that we got to a Thursday and we still weren't below the Sunday opening price. So it kind of forces you. It forces price. Like, don't get me wrong, it doesn't have to go to it, And if it doesn't, so be it. That's why we have stop losses. But my point is, we got all the way to Thursday morning, and we still haven't we still haven't traded below that Sunday opening price, and that's what was telling me that's what would give me the confidence to understand that we're going to be, likely trading lower on the Thursday. So if we get, again, if you've watched my videos, you'll know if we get to Wednesday and we still haven't touched that Sunday opening price, that's the only thing I'll talk about. Now, there's the occasional weeks where we will just keep rallying and price will climb, and it won't even create it won't even trade into the Sunday opening price. But we got all through the week and didn't touch Sunday once, the Sunday opening price. That's highlighting to me that we're likely going to run to it, and you'll see how fast it runs to it. Sometimes we create the high on a Tuesday and then I target Sunday. We might touch it on the Wednesday or the Thursday, but they waited. If we had, and you got to remember as well, when we're looking at price, it's creating a candle. It needs when we create a candle at the beginning of each week, I always say, am I expecting an up close week or a down close week? Am I expecting a down close week? That means that we need to create the candle, we need to create some kind of high, and then we need to create the body, and then we need to create the low. Let's make it clean. There's a indicator you can get. I use MetaTrader, but I use MetaTrader. There's an indicator you can get that, by the way, I don't use indicators for the record in terms of, thingy indicators, but there's an indicator you can add where you can see where you are in the week. So if you go down to this time frame, you'll see how the daily candle is forming. This beautiful. So this is the daily candle for Friday, right? I think you can get a weekly. Oh, prop firm. Oh, FOMC. What do they call it? Not FOMC. It starts with FTMO, because they're UK based and they've got really good customer service and stuff. But anyway, my point is, what am I saying? Yeah, if you can see where you are in the week, you'll understand why I understand that when we get to a Wednesday, because remember, if we were on Wednesday here, the candle would look like this. The candle would look like this. There'd be no down wick. It would have just looked like this. So we haven't created no kind of wick, and we know that Sunday. In fact, let's make this as realistic as possible. This might be a good exercise. So we're gonna ignore Thursday and Friday. This would have been an up close. And we would have created this wick by then. But yeah, so we would have created, if we were on Wednesday here, that's what the candle would have looked like. Now, if I'm expecting a down close candle and we still haven't created a down wick and Sunday opening price is just there, then that's the only place I want to see it head, and that's what we got. But anyway, easy said than done. I'm saying you need to understand the, what do you mean? I don't know what you're saying, Pulse G. And also I don't wanna what's the word? I forgot the word. Anyway, understanding the weekly range is what's gonna help you. And also, if in the Discord, if you go to materials, the channel, you'll see all the weekly profiles, and if you study those, you'll understand. But Sunday opening price, can't stress it enough. Next week, try it yourself. Just draw out the Sunday opening price, and you'll see how price treats it. Even look at how price stays below it, and it uses it as support and resistance constantly throughout the weeks. We can even look at the previous week, and we'll see the same thing happen. Let's just copy and paste these over. Where are we? Sunday. Monday, Tuesday. Cool. That should do. Now in this example, the Sunday opening price was used as support. But still, if we get to Tuesday, you know, a short from here down to that Sunday price, that's a trade in itself. Again, easier said than done. And obviously we bounce at the back of it. So that candle, I can imagine on the weekly probably looks a little bit weird. Doesn't even look that weird. I don't even know what this is showing me. Is it showing me the daily? I've confused myself at this point, guys. How do I? It's not letting me remove it. Cool. Anyway, we're going to bring this to an end. I hope you find this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord. All the links are in the description. Actually, no, they're not actually in this description. But join the Discord. You'll be able to find the links. Thank you so much for joining, guys. And I'll catch you in today's video. And I will try and do another live stream next week, Sunday as well. Thank you. Peace.